Think about it, you late nights in the middle of June. All right, we're gonna get going a little early. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news that I can get to as quickly as possible. Not really, a little bit slow. But today we're going to be covering Bitcoin hitting $69,000 by mid-2024. Of course, this is coming off of the idea that we'll have the halving in April. We're also going to be talking about the crypto exchange CoinSpot over yonder being hacked for $2 million. And we will be talking about the Ethereum fees jumping to $100 after the BlackRock ETH ETF filing, because that's a big deal. Then a primary portion of this show is going to be covering Dynex and the issues with SRB miner and all of that. I did a video on Friday covering a majority of it. However, there is updated information. We're going to review the impact it's had on the network, as well as not just its decentralization, not just its hash rate, but also the price, etc., and talk about that primarily today. Then I do have a pretty interesting GPU solution for miners that I think is very enticing. Something I think moving here into the future might be something you want to take a look at as it pertains to building out rigs. And then we'll talk about, of course, all of the mining profitability or lack thereof still on the GPU side, while everything leans towards, of course, the ASIC side of things. And that is pretty much where we're at. Let's go ahead and get into it right after a word from today's sponsor. Today's sponsor is BT Miners. BT Miners has been a longtime sponsor of the channel and a proven reliable source for ASIC miners. If you're looking to purchase ASIC hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICminervalue.com and CryptoMiner.com. Follow the affiliate link in the description and tell them SOT sent you to support the channel. Alrighty, welcome back everyone. I did want to mention that BT Miners is releasing a new app here. I officially am going to be talking about it next week, but I wanted to go ahead and let you guys know that they are releasing a full encompassing app that is going to allow you to essentially see basically profitability on certain miners, etc., as well as working on purchasing miners through them and so on. So it's a pretty awesome app that I think that you'll see a lot of people talking about here. They've been a long time sponsor on the channel, so definitely go support them. And they are fixing my promo code. So promo code SOAT should begin working this week. Once again, it was broken for some time, but they apologized. They were not aware of it. That was kind of on my bad end too. I hadn't talked to them about it. So that should be all resolved here for you guys too as well. And let's go ahead and hop into the first topic for the day. Bitcoin could hit $69,000 by mid-2024 as it enters acceleration phase, analyst says. Bitcoin prices have doubled this year amid a spot ETF push by prominent traditional finance firms. Bitcoin prices could regain their lifetime peak price over $69,000 by mid-2024 as they undergo an acceleration phase marked by volatility and a sharp rally, some traders expect. That is an 88% gain from the current prices of $36,500. Of course, today we're over that $37,000 mark on Bitcoin. Quote, Bitcoin uptrends tend to move quickly once they get going, moving hundreds of percent often in less than a year, end quote, shared Corey Mitchell, an analyst with trading.biz, in a Friday note to CoinDesk. This is called the acceleration phase. Now, of course, when we're talking about this phase in particular, it's fully expected for us to start to see it after the halving, and the halving is going to be happening in April of 2024 or so. Usually that acceleration phase in the past has been the 6 months after, of course, the halving, not before that, but we're starting to see a little bit of a different type of interaction due to the ETFs, due to higher retail visibility on the prices of Bitcoin, etc. And so if you want to understand the halving cycle and how that impacts the price of Bitcoin, I go into more detail in my crypto mining e-course at sonofitech.com. If you want to check that out, you can. But let's go ahead and pop more back into this. According to Mitchell, really big gains happen a year and a half after the bottom, meaning near 90-degree price surge could resume sometime around mid-2024. The cryptocurrency bottomed out in November of last year. Quote, in 2013, Bitcoin rallied 1,200% in approximately 100 days. In 2017, it rallied 1,900% in just under a year. In late 2020, it rallied 400% in about 140 days, end quote, Mitchell said, warning of several pullbacks and price dumps on the way to retake of highs. Of course, these pullbacks should be completely expected over the next few months, especially. Once we get to the point to where the price to mint a Bitcoin is actually increased by, of course, the halving in April, that I think before that, you're going to see more pullbacks and so on before that kind of comes into fruition. That being said, for miners to really be profitable across the board, meaning current miners that are out there based on average electricity costs, it will need to hit, last time I calculated, between 45,000 and 50,000 US dollars by April. Do we get there? I would assume so at some point. However, how is that impacting, how high we can go in the future and so on, and what they're talking about here specifically, because this is kind of going off of these ranges based on the actual time as opposed to the actual halvings of Bitcoin. So it's analyzing it from a slightly different perspective, even though they are correlated. Over the past year, the world's largest asset by market capitalization has seemingly shaken fears stemming from multiple bankruptcies of prominent players in the industry and a generally bearish economic environment by gaining almost 116%. Recent bullish sentiment has been largely buoyed by spot Bitcoin exchange-traded fund filings in the US, bumping expectations that regulated offerings could open the gates to widespread institutional demand. Demand and usage for regulated instruments have grown in tandem with prices. On Thursday, Bitcoin futures traded on the Chicago Mercantile Exchange, the CME for short, registered the highest volumes worldwide, toppling those of industry leader Binance. Open interest, or the amount of unsettled futures, stood at roughly 4.07 billion US dollars, up some 4% in the past 24 hours and representing a 24.7% market share. In contrast, open interest on Binance stood at 3.8 billion US dollars, down 7.8% during the same period. Market observers told CoinDesk they considered the rise as indicative of institutional demand for Bitcoin products. Now, of course, this is something that I would ask you guys out there. We've been in cryptocurrency for a long time. And the entire idea of institutional money coming into Bitcoin is kind of a step on the ladder to the end goal, which is, of course, removing the need for any of these institutional instruments for me to be able to transact peer-to-peer with an individual and not have these interferences. So are these interferences from institutional demand a positive or a negative from your point of view? I'd like to hear your thoughts in the comment section below, as well as the live chat. I'm definitely pretty mixed on it. If I do take a look at Bitcoin as being the Trojan horse as advertised, then the idea would be as more institutional money comes into Bitcoin in general, then of course that boosts up the price of Bitcoin for everybody that has been in the past. But if we're supposed to have a new currency that provides a solution for all individuals, even those that have not in the past invested in Bitcoin at a lower economic level, do they get impacted negatively by this? And this is something that kind of runs around in my head over and over and over again. So maybe a little bit of clarification or insight from you guys in the comments and live chat would be appreciated, so I could maybe form a better, more thorough opinion on that. Moving on, crypto exchange CoinSpot reportedly suffers a $2 million hot wallet hack. We're going to talk about these in every day in and every day out, because it's important to make it very, very clear to individuals that if you are going to be getting into cryptocurrency and participating, that you shouldn't use centralized exchanges. And you probably shouldn't use centralized exchange traded funds either, really, ironically, in this whole conversation, because this is the type of thing that happens. You need to control your keys, not your crypto. Another example of this most recently that's not as impactful, but pretty dang impactful, has been, of course, TradeOgre and kaspa, and the blocking of being able to deposit or withdraw kaspa from TradeOgre, suppressing the price below 3 cents, while on other exchanges, kaspa has skyrocketed to over 8 cents. And you have your funds stuck there in TradeOgre. They can take those out, go ahead and arbitrage that themselves, make a killing, while you have basically just a paper record of it in their centralized exchange. And then if the exchanges themselves weren't suspicious to begin with, you still have to worry about the fact that you are reliant on that exchange to protect your funds from every single hacker in the damn world. And that is just not a viable solution if you are looking to hold cryptocurrency for any extended period of time. Blockchain security firm Certic believes the $2.4 million draining of a CoinSpot hot wallet is likely the result of a private key compromise. Australian crypto exchange CoinSpot has reportedly been hacked for $2.4 million in a, quote, probable private key compromise, end quote, over at least one of its hot wallets. According to a November 8th post to his Telegram channel, blockchain sleuth ZachXBT highlighted 2 transactions entering the alleged hacker's wallet. Afterward, the wallet's owner bridged the funds to the Bitcoin network via Thorchain and WAN Bridge. In emailed comments to Cointelegraph, blockchain security firm Certic said the alleged exploit was the result of a, quote, probable private key compromise on at least one CoinSpot hot wallet. According to data from Etherscan, a transaction totaling 1,262 Ether, worth $2.4 million at current prices, came from a known CoinSpot wallet and entered the alleged hacker's wallet. The owner of the wallet address that received the 1,262 ETH then began making a series of transfers. In 2 separate transactions, the wallet's owner swapped 450 ETH for 24 wrapped Bitcoin via Uniswap. With the next 10 minutes, the address swapped 831 ETH for Bitcoin via Thorchain, sending the Bitcoin to 4 different wallet addresses, according to Certic investigative data viewed by Cointelegraph. A search of Bitcoin Explorer BTC scan data showed the owner of the 4 Bitcoin wallets distributing the allegedly ill-gained Bitcoin to multiple new wallets, transferring smaller divisions of the funds to additional new wallets each time. This is a tactic commonly leveraged by attackers to prolong the investigation process, making it more difficult to track the entirety of the stolen funds. CoinSpot was established in 2013 and currently stands as Australia's largest crypto exchange by reported user numbers, serving around 2.5 million customers. The exchange is regulated by the Australian financial watchdog, the Australian Transaction Reports and Analysis Centre, and was granted an Australian digital currency exchange license by the regulator. CoinSpot did immediately respond to requests for comment from Cointelegraph. So just to reiterate everything here, even if you have a centralized exchange that goes through a regulatory process, and a pretty stringent one coming from Australia, just to be frank, because we are aware of the amount of regulation going on in Australia surrounding cryptocurrency. Even if you do have one of these high level exchanges that pass through all these regulatory checks, etc., doesn't mean you're safe. The fact of the matter is that the attackers are always one step ahead, and it's very difficult for these centralized exchanges to protect your cryptocurrency. So even if they aren't going to do something malicious themselves, once again, you have to worry about everybody else that's going to be malicious towards it as well. And this means not your keys, not your crypto. Make sure you're taking it off of exchanges when you're ready to hold it. It should only go into the exchange to either convert to US dollar or reverse of that, go from US dollar to, of course, the crypto and then into your self-custody. And these are very important principles that need to be reiterated over and over and over again as we see it. This hack in general is not that big of a deal. This impact is not nearly as impactful as something like FTX. I wouldn't presume that it would have that much impact on most users participating within cryptocurrency, unless, of course, you are within Australia, and then you may have an even harder time at obtaining cryptocurrency. Of course, the workaround here, as I always state, and why we mine and why I do what I do over here, is that the best way to go ahead and make sure that you can participate within cryptocurrency is to mine it. At the end of the day, it's the safest, it's going to be the most reliable with the least amount of regulations that's going to tell you to stop it. And the only thing you really have to worry about, of course, is going to be power cost, which can be an issue, but provided you are expecting this number to go up, having that virgin Bitcoin as well is going to be an advantage in the future. Now, let's talk about Ethereum fees jumping up once again. Now, we've been talking about Ethereum for a long time, and see, we're miners over here. GPU mining was massive thanks to Ethereum for a very long time. It was kind of a staple within cryptocurrency. You had your ASIC miners over on Bitcoin. You had your GPU miners generating basically income on the Ethereum network. And then Ethereum decided to move to proof of stake, basically leaving a massive hole for GPU miners. The idea behind this move to proof of stake from Ethereum was to reduce fees. However, it appears that whatever they did with the migration to proof of stake has not eliminated the high fee problem on Ethereum, and has perhaps even exacerbated it, because we are not even in a bull run and we have fees jumping up to $100 on the Ethereum blockchain. What a piece of Ethereum fees briefly jumped to $100 after BlackRock's ETH ETF filing. Fees spiked to as high as 270 GUI. I always pronounce this wrong, but gas essentially, late on Thursday. The data shows temporarily touching a level last seen in June of 2022. Heightened demand for block space on the Ethereum network has made transactional activity significantly more expensive for Ether users in the past 24 hours, data from Dune Analytics show. Fees as measured by median gas prices spiked to as high as 270 late on Thursday, temporarily touching a level last seen in June of 2022. That pushed up costs of trading swaps to anywhere from $60 to $100 for a few hours. GUI is a small unit of Ether equal to 1 billionth of an ETH and is used to denominate gas prices. Gas refers to the fees Ethereum users pay to ensure their transactions are included in the earliest block by network validators. As of writing, gas fees used to pay for activity on Ethereum were 33, the highest since May. Ether transfers between wallets cost an average of $30 as of Asian morning hours on Friday. The surge in fees came as investors discovered financial behemoth BlackRock had filed for an exchange-traded fund that holds Ether months after its Bitcoin ETF filing. This likely buoyed investor sentiment as prices jumped as much as 10% across the $2,000 mark. Ethereum validators are incentivized to include transactions that pay the highest fees instead of a first-come, first-served basis, meaning fees on popular tokens can often run to thousands of dollars. Nansen data suggests that on-chain activity has remained tepid relative to a more bullish period in 2022, indicating retail audiences have been largely absent from the on-chain trading. Quote, there is no inclination of on-chain activity increasing alongside it in terms of DAUs and newly funded addresses entering the Ethereum ecosystem, end quote. Nansen analyst Jake Kennis shared in a Thursday message. So it also sounds like in this particular case, we aren't seeing new activity coming in. It does seem like this is primarily, at least if I'm reading this correct, people that are already participating within Ethereum. I think overall, of course, Ethereum lends itself very well to ETFs just in general because it already is such a broken system. You have essentially all of the validation going on centralized servers like AWS, etc., not being able to be decentralized for their transactions. And if we see it move over to an ETF, I feel like it just fits perfect for Ethereum. Unfortunately, Ethereum is still the most widely used network for, of course, anything like NFTs to any of your decentralized token platforms like Uniswap. And Solana really has been taking over a lot in this particular field, but Solana has a lot of the same issues. And the Solana network goes down a lot more, albeit, of course, Solana doesn't have the fee problems or as much of the fee problems as Ethereum has. But there hasn't been a good proof of work solution, at least that is being utilized very heavily. If we start to take a look at some of the markets here recently, what becomes really interesting is that we have seen a boost in the price of Ergo here. And so if you guys take a look, Ergo recently here just went up to $1.40 over the past day or so. And this pump is really interesting because if we are talking about proof of work competitor to Ethereum that already has everything available for DeFi and NFTs, well, Ergo is kind of there and ready to go. And thanks to the Rosen Bridge, of course, we will see interaction with Cardano, even though Cardano has been, unfortunately, a little bit low on the development side of things. It's something to keep in mind. These are all kind of things that I've noticed. Now, of course, you could say layer one and layer one tokenization of assets on Ravencoin for the proof of work side of things, but it really hasn't been adopted across the board and has a lot of issues with the way, at least the way I interact with it. It doesn't appear that there's a good decentralized way to actually swap these assets because of the way they're coded into the chain. So, you know, tomato, tomato. There are other options, of course, coming down the line from a proof of work standpoint. People do say that Kaspa would add this, but of course you are talking about ASICs versus GPUs. Ergo has the advantage of GPU mining. And then, of course, we have Alephium, which has been doing a lot of work in the DeFi space. There's a lot of stuff coming up. So keep your eyes on these and see which ones are getting the most development. See which ones are going to get integrated into large marketplaces, such as, of course, Uniswap, or such as, I don't know, any of them, right? We could go into any of the NFT platforms like Ocean and whatever, all of that stuff. Keep an eye on what platforms are going to adopt these proof of work alternatives to Ethereum. That's what I would lean towards. Let's go ahead and talk about Dynex. Of course, Dynex is important because Dynex, from the perspective of why does Dynex matter? Dynex matters because, frankly, they were the first to market with proof of useful work for blockchain technologies. And you could say, of course, with the testnets and so on, or you could say that Flux has been working on this longer. However, first to market is very important, but did they move too fast is my question. Everybody that's been in the crypto space for a while now has come to the consensus that I've talked to, and we're talking about developers. The idea is that really Dynex should still be in testnet because of all of the ups and downs the network has with trying to integrate proof of work with proof of useful work and basically denoting those two. Right now, the way Dynex works is that you have a portion of the GPU mining essentially a modified version of CryptoNight, and then validate, and then that's the actual mining portion for solving the blocks and the transactions on the network. But the other side of it, which is the useful work, is validating that GPU is then allowed to mine that smaller, lighter weight version of CryptoNight by validating that it completes essentially different machine learning jobs and SAT jobs. Now, the big issue that came up that we talked about on Friday was that SRB Miner was caught cheating by essentially removing some of the SAT jobs from the mining software, which meant that it was able to basically have a higher hash rate because it can move some of those over to that CryptoNight algorithm portion and have a higher hash rate. And this meant that the developer of the mining software, Doctor with a K, he was able to make some more money off of that because his fees were at 2%. He also had dual mining with Zilica and was the only mining software available for AMD. In an initial release or announcement from Dynex, Dynex came out and said that they were going to be removing SRB Miner once they had a transitional phase to new upcoming AMD versions. Now, I'm aware of the miners that have the potential for deploying AMD supported mining software from a third-party perspective. And in reality, the only person that I've been aware of, or the only miner that I've been aware of to be working on this is BZ Miner by iDoc. And he has stated that he's still a few weeks out from really having it ready to go. So I was like, okay, well, we're just going to have this weird AMD being, out here, this SRB miner being allowed to be used, even though they said they were going to pull it off the network. So they clarified. So when Dynex clarified, here's what they came out with. Important SRB miner update. They said, number one, machine learning job calculations are computed accurately. Functionality of the Dynex SDK has never been compromised. In actuality, this has been changed as well. So the number one thing that they said previously, oh my God, this is all right, guys, this is so stressful because the problem is Dynex has changed. This has actually been changed from the time I had the official post to now. The number one prior to what we're reading right now, which has been edited or changed to some extent, was that they aren't going to remove SRB Miner. What they did was basically on the Dynex side of things, which is where they should do it, is modify it to where essentially the SRB miner has a significant decrease in hash rate. So we'll get into this one now too, but to give you guys an update, there's been a couple. I was under the impression at first they were going to remove SRB miner support. Now it appears they're not going to remove SRB miner support at all, ever. Hopefully we will in a few weeks get AMD support, but as it sits right now, that's not available. Let's go ahead and hop into this one. It says machine learning job calculations are computed accurately. Functionality of the Dynex SDK has never been compromised. It was detected that SAT jobs, which are run by different kernel and SRB, are only partially being calculated. This is the original. So hold on, maybe I have this wrong. Let me go over and look at this once again. Sometimes I get a little lost. It is what it is. Yes, this is the post I wanted to address. Here we go. So it is here. They didn't change this one. I'm getting confused. Anyways, SRB Miner update 2, we want to reiterate on yesterday's announcement regarding SRB miner. They said Dynex is not going to be banned or is not going to ban SRB from the network, which is an overall positive because this solution should be on the cryptocurrency side or on the blockchain side, not on the miner side, meaning that if you have a vulnerability and you're trying to force a third party to make the changes to prevent it from doing it, it doesn't stop other third parties from basically manipulating the blockchain at the end of the day. So you could have private farms with private versions of miners that are getting higher hash rates by skipping the SAT jobs. Okay. So this is really the point that I wanted to bring up, because I saw some arguments, people saying, you know, why is everybody getting upset with Dynex here and not getting upset with SRB miner? Because any third party shouldn't be able to basically find a hole in the network or a hole within the blockchain to manipulate it. And to, that means that the network itself is compromised. So if you did leave it as is and you didn't fix it on the Dynex side, then you would have a whole bunch of other people going through, finding the issues and then implementing it privately for their own farms. There would probably be a lot of money behind it, not dissimilar to what goes on with FPGA mining. Those guys are trash. Anyways, let's go ahead and look at the full of this because I didn't cover this yet. It says number 2, as there was a vulnerability identified, it has been patched. This leads to the situation that SRB computed SAT jobs will not be accepted by the network because they are incorrect. The SRB miner dev refused to fix his implementation. This one is a little weird. I thought that, and this is where I don't know where the drama is going on here. Doctor, like I talked about in the Friday video, seemed to be apologetic for it. I've seen random screenshots within the SRB miner Discord that there was discussion between Yeti and so on. There was some very weird stuff where it looked like, depending on the way they screen capped it, either Yeti was basically trying to ask for some sort of bug bounty and so on. And then he accused Doctor of essentially trying to elicit a bribe to provide him the fix. I'm not so sure that it was completely refused. I think there were bad interactions between people. Bad interactions between people are going to happen all the time. I'm not necessarily sure or positive that what they're saying here is for sure true. I don't know that Doctor refused to fix it. But at the end of the day, too, it can't just be fixed by the third party. You need to figure out how to prevent it on the actual, once again, the blockchain side. So I just wanted to clarify that. Keep in mind, this is coming from Dynex. So, you know, there are multiple sides to the story, etc. Now, number 3, ML jobs have never been affected by SRB's modifications. We therefore suspended all SAT jobs with immediate effect after seeking agreement with our customers. Only ML jobs are being computed on Dynex until malleabless mining is available for everyone. This ensures that only valid computations are being computed on the network. The above requires a transition of all ongoing jobs with 100% saturation. We apologize if some miners experience congestion while downloading their new computing files. Now, remember, Dynex is pretty unique in the fact that you download that jobs file. And from what I understand, that file is going to be a lot larger. If you do run into issues with that getting updated, I have covered in the past and should be clipped as well as on locals at sonofatech.locals.com how to delete that file. You may need to delete that file for it to build it out properly again. So take a look at that if you're having issues getting your miners back up and running. It says, please note you might be seeing reduced hash rate on your SRB rigs. That is because SRB-based SAT competitions have been inflated by exploiting a vulnerability by SRB. The hash rates you are seeing when running ML jobs are the accurate rates achieved by the miners. Now, I'm not so sure that it's accurate because we're still, this is where I get a little confused. It seems like they have to have modified the hash rate, because if I understand correct, you have the separate part, which is the actual Crypto Night lightweight algorithm that's doing the computing of the network transactions, and then you have the rest. So when they removed the opportunity for the SAT, I don't know if how they adjusted that out necessarily, basically saying that it might be artificially blocked at this point. And then with a new miner and malleable endpoints, maybe this changes, of course, in the future. But right now, SRB miner, just in general, is not going to be what you want to be on. Everything I've seen is like decreases across all of the GPUs utilizing SRB miner pretty significantly. You know, we're talking about 80% reductions in the hash rate on Dynex. And you can actually see this on the Dynex stat page for mining pool stats. And so this has really been the impact. We've gone from, you know, almost 2 gigahash a second to now 1 gigahash a second. We've lost half of the security on the network. We have seen large increases and decreases for Dynex in general. And so this isn't really necessarily out of the norm, but it is pretty impactful as it is, because we're seeing the hash rate kind of reverse back down. Remember, SRB miner kept coming out with the improvements and people were moving over. 1.0 miner was coming out with improvements. We were seeing large increases of hash rates, right? The good news is that what I have noticed is that if we took a look at, for example, the decrease in the hash rate and the difficulty adjustment is looking like it's staying up to date with this. So it does look like the difficulty adjustment is proper. So you should be able to get a good difficulty decrease here if you have NVIDIA GPUs and decide to use something like 1.0 miner. However, it did have a pretty significant impact on the price, because as the rest of the crypto market is going up, including old coins like Ergo, we are seeing Dynex go down in price over the past day, really over the past few days, starting on the 9th, where it was getting ready to cross that dollar mark. And then now we are pretty much 20% down since this has all come into fruition. People are losing trust in Dynex right now, as they probably should. But I'd like to hear your thoughts and opinions. Does this, hurt your perspective on Dynex as a project, or do you think they can recover from this pretty easily? Let me know in the comment section or the live chat. Now, I will say, from my perspective, we're talking about something that is first to market with something that has never been done before. So I think that Dynex recovers from this quite easily. Just my humble opinion, there's no real competition. There is some competition on the horizon with Flux, but it's also something completely different in the way it functions. Actually integrating, of course, the useful work into the actual algorithm is something that puts it above something like the Flux solution, which is going to basically be kind of like running nodes at the end of the day. It's going to be a little different, at least from the solutions I see. Now, we do have Yeti in chat, so for everything that I am messed up on, I'm sure he'll issue corrections within the live chat. We can talk at the end of the video too to clarify any concerns that I have brought up and what I may have missed. Now, 1.0 miner version 1.25 is out. This is going to be for NVIDIA GPUs. There's probably a significant advantage for you right now if you are a primarily NVIDIA heavy mining farm, as the difficulty has decreased. Definitely something you want to take a look at. On the AMD side, people are going to be struggling, I think. However, I think that there are opportunities, I think, from the perspective of the AMD side on things like Core still, which has been high profit. Things that are Prog POW are still pretty advantageous on the AMD side. You also have still the Ergo to talk about, which has had its recent increase in price. So you have that you can move over to. Let me know what you guys are mining with GPUs. The profitability is still pretty bad, considering that at 10 cents a kilowatt hour, not even a 4090 is making that much profit. It's still only like 45 cents a day. And that's if you're dual mining. And frankly, as most people are aware of, dual mining is never as reliable as it appears to be in profit calculations. And that's kind of the whole problem with them in general. So, what are you mining? I'm curious. Right now, I'll let you guys know what I'm mining. And I am mining Nexa right now. And the reason being, of course, is that Nexa is one of those cryptocurrencies that is eventually going to move to ASICs. And so while I can mine it with GPUs, and I actually have one 1660 Super offline right now, but while I can mine it with GPUs, I'm just stacking some Nexa. So that's what I've been doing here, other than the Abelian side of things, which is not integrated within HiveOS. So Abelian is going to be kind of my spec mine on that perspective and what I'm doing over there. Now, I told you guys that I was really interested in a GPU from the perspective of building out a rig. This is coming from Galax, and it is an RTX 4060 Ti with 16 gigabytes of memory with a single slot blower design. And from the perspective of building out pretty awesome mining rigs within servers, which is going to become more relevant, right? Because we're talking about this move into proof of useful work. We're talking about these moves into AI. And because of that, you need more compute, you need more memory, and having single slot solutions where we really do have this potential of buying like old VDI servers and repurposing them. This makes a lot of sense to me. Now, one rarely gets to see a single slot gaming GPU these days. A model with 16 gigabytes of memory that shouldn't break the bank is even less likely to be seen. The blower type designs are currently geared towards workstations and AI workloads. Perfect for mining, right? Galax solution may help those who do not need expensive RTX cards, such as the 4000 ADA as a small form factor, which costs something towards $1,700, but rather only something to act as a secondary GPU to offload these intensive tasks. The single slot design has its advantages and disadvantages. Users can add more GPUs into a cluster, and if they are using workstation boards with expanded PCIe slot options. However, one should remember that the 4060 Ti is an 8 PCIe lane GPU, so using 2 or even 3 of these cards may not be a problem for most consumer grade boards. But of course, when we're talking about this, we're going to be talking about slotting them into servers, probably something along the lines of a Xeon or an Epic that's going to have a lot more PCI lanes than your standard desktop solutions. The card features 1 blower fan and 4 display connectors, 3 DisplayPort and 1 HDMI. There's also an 8-pin power connector located at the rear of the card, which should improve cable management greatly, which obviously in these solutions is important too. Such a design is more common for workstation GPUs than gaming models. The RTX 4060 Ti Max features 16 gigabytes of VRAM, so it's a beefier version of the 80103-351 model with 4,352 CUDA cores, but also has the same drawbacks such as a 128-bit bus or just 165 watt TDP. These could be honestly, quite frankly, pretty interesting for Dynex as well, because of its Dynex's implementation of being more amount of VRAM compared to the memory bus width and the actual memory speed. So these are things that I take into account. This could be a really interesting card on Dynex as well. The Max GPU, of course, runs at NVIDIA reference clock and very likely to offer any form of, or very unlikely to offer any form of overclocking. They always say that, but as you guys are aware, where there is a will, there is a way. People seem to figure this kind of stuff out with overclocking on these pretty easily. Most overclocking software integrates and works with any version of any NVIDIA GPU. So I'm going to say it's more than likely than what the article thinks it is. That's just my humble opinion. What do you guys think about this GPU? I think it's dope. I think for mining, it's amazing. I want to get my hands on one. It'd be really cool to throw these in some workstation setups. Something like Threadripper 2 could be really interesting. Making them single slot does make it a lot more viable for building out larger rendering farms at a cheaper price. And it could be really interesting for AI moving into the future. So we talked a little bit about GPU mining ASIC mining, obviously the big winner here is going to be the kaspa miners. They are just absolutely, destroying everything else as far as mining profitability, as you guys have been seeing. Of course, we have huge increases in the price of kaspa over the past, week or so, right? With kaspa going, up to 88 cents. It did break, or 8 cents, sorry, 8.8 cents. It did break 9 cents for a little bit. Interestingly enough, we had over the past 7 days, Kyla coin go up 62%, but it had been going down quite significantly for a while. So Kyla coin's just kind of recovering, which is interesting. But we are also starting to see some of the older coins start to get interest, right? We had that recent pump this week from Flux, which is an older coin. We had pumps from Ethereum Classic, which is an older coin. We're starting to see, we were seeing flows into new proof of work coins and newer cryptocurrency projects. Now we're starting to see some of that flow back into older, more established projects, which is really interesting. But yes, like we're talking about almost a 2 billion market cap, 2 billion market cap on kaspa. I think when we saw this with Kadena, when it made its shift initially to Bitmain, we saw a 4 billion market cap. We had talked about this before on my show, meaning that we would have, I think at that time, we would have expected the Bitmain release and pump to hit us up to 16 cents on kaspa before it came back down. And so we are still kind of, I think, in a bullish trend for kaspa. At least over the short term. I would expect fall offs, and I've been incorrect about all this so many times, so don't quote me on this, and not financial advice. Personally, I'm expecting fall offs for kaspa to happen sometime in April, just based on the previous analysis of what had happened with Kadena, for example, after Bitmain, or when it starts to settle out, right? I do think that it does look like kaspa's been extremely strong in this particular scenario compared to other coins that have been flooded by Bitmain ASICs, but time will tell, because we still have to worry about on the kaspa side, how many millionaires have they made already, right? And how many of those people are going to want to realize that they're millionaires? Well, if we take a look at the price of almost 10 cents, right, we would assume that all of these whales are basically millionaires at this point, right? So 200 people, give or take, depending on some of these being exchange wallets, etc. And once we get really into the shark ranges, where a shark is a millionaire, at the mid levels, right? I think that's when you'll see more people start to want to realize that they are millionaires, right? And that's really what you have to kind of take into account. Like, how many of these people are sitting around waiting to become millionaires off of it, and how fast do they want to realize that? And, it's just the way human nature is. And so it's kind of something I'm interested in. Right now, the mining looks fantastic. We could see these go down as more units get deployed, but Ice River is starting to remove the manufacturing of some of the lower end, like the KS1s and the KS2s here. And so I think when people are looking at these, it's interesting to note that these will not be available anymore from Ice River. I am under good authority, and links are down in the description, that there are 1,500 left over of the KS1 at Coastal, and you can get 3% off with promo code SOAT. And so that link's down there if you guys want to go pick up a KS1. I just figured, there you go. Me personally, I haven't picked up an ASIC for kaspa at this point. The prices on the Bitcoin ASICs were just too good, and I wanted to go that route. And so I've been going the Bitcoin mining ASIC route, especially because you can get those S19 95 terahashes, and you can get them down to, 25 joules per terahash, making them very competitive and very cheap. We're talking about, for a while, I was picking them up for like $500 a pop. I even got a few for like $400 a pop. Now they're skyrocketing prices back up on those. Those were the most enticing. Like I said before, when I'm looking at my ASIC purchase time for kaspa, which I will do, it's probably going to be around April timeframe. That's what I've set in my little book of this is what I'm allowed to do and this is why. And then that's what I do. Those are my personal strategies. Everybody else, that doesn't mean I'm right. Just to be clear, that's just my personal strategy as far as that's concerned. I will have a KSO Pro coming in primarily because, well, iServer sent me one and is sending me one for free. So we'll do a review on it. So technically I'll be back into mining kaspa here in probably this coming week. And I'll probably go over building nodes. Solo mining with it is probably what I will be doing with it. Of course, we'll cover profitability for you guys without solo mining it. Let's go ahead and get into questions and answers and clarifications. Please tag @SonOfATech to highlight the message orange and make it easier for me to read. And if you don't mind, you can do a super chat, which makes it even easier for me to read. And they're not, required or anything, but they are highly appreciated. So thank you so much for those. And I'm going to go ahead and scroll up a little bit. We had Billy say, @SonOfATech, have you read Software? Yes, sir. I have a copy of it. I believe my copy's at the farm right now, though. RD27 says, @SonOfATech, what happens after all the kaspa gets mined in 2037? And this has been something that I've talked to a lot of people about that are hyper bullish on kaspa mining. And I would say I would technically be more bullish, even though I'm a proponent of mining over purchasing cryptocurrency. I think revenue from mining is better and puts you in a more flexible position than holding something that, you have to sell if something bad happens, right? That being said, in the case of kaspa in particular, it has extremely quick emissions, like 100 years faster, like 120 years faster than Bitcoin. And the problem is that you have to have the adoption meet that emission cut. So when we talk about this, the way miners get paid is you have a block reward and you have fees, okay? And the fees come from people utilizing the network, all right? Just so you guys have an idea. And because of that, to make sure that you have enough security for the network, typically you have the block reward to compensate for the fact that the network hasn't been widely adopted yet. So the faster your emission schedule, yes, technically the faster the price of the coin will go up, but due to the fact that miners will start to decreasingly more and more stop mining, you have a reduction of security as these emissions run out because there's no incentive for people to continue to mine it. So kaspa will be a really interesting kind of experiment, in my humble opinion, because from what I've seen, or at least the way I look at it, there will be no incentive left for miners when that quickly, right? You're talking about needing massive adoption to drive the prices of the fees extremely high for kaspa to maintain its security, right? And I don't know that that is necessarily going to happen. We're talking about Bitcoin barely starting to get accepted by the mainstream. kaspa is a fairly new coin, albeit has pushed up very, very quickly. But I think it might be, just in my humble opinion, a better idea to just purchase kaspa as opposed to purchasing the miners themselves, because the miners are going to be you aren't going to want a miner in 2037 probably for kaspa. I don't see why you would want one. You're not going to get paid anything unless it's used a lot. And we're talking about a very short timeline, right? We're talking about what, 15 years, 20 years? So I don't know. That's kind of where I'm at as far as that is concerned. You cannot mine kaspa with unmineable. You're not mining kaspa. That's not how unmineable works. Unmineable is just converting your coins. All right, just to clear that up. Billy says, does reading software not make you think that Ravencoin is a good coin based on the fact that it's more energy intensive or did misunderstanding the message of the book? Well, no, because you still, once again, it's adoption, right? So the reason why Bitcoin is important when in the aspect of software is that it's already reached the peak of a country not being able to have enough power to attack the network. You could attack like an individual that has, I mean, an individual with enough money, a rich individual could still attack the Ravencoin network. $100 Air, thanks for the $5 super chat. Says you were talking about Nexon, ASICs, any expected timeline? There's no expected timeline that I've gotten from the developers unless something's changed recently. I had the interview, of course, a few months ago. You can definitely go read or rewatch that. You know, we do have confirmation that their plan is to move to ASICs, so we'll just have to sit back and wait. FE says, how's the jiu-jitsu going? I get to jiu-jitsu maybe about twice a week. I have very long rest periods right now. All right, boys. Looks like we're going to go ahead and wrap it up. Thanks everybody for watching today. Hit the like, comment, subscribe, and notification bells down below. Check out BT Miners. Also, don't forget to check out if you want a KS1 to go ahead and get that on. I think this is the last batch, so there's no KS1s coming. If that is something you were planning on doing, make sure you get one now from Coastal, because my understanding is they're going away. So there you go. I'll see you next Tuesday. Oh, what? Crypto mining show or crypto Ecourse at sonofatech.com, and support me over at sonofatech.locals.com.